Hey everybody, Jeff Sutherlin, Chase Waldron with the Jeff Sutherlin Team, EXP Realty. We're here to give you your monthly market update for real estate all over the valley. We're pumped, aren't we, Chase?
Today's the day, man. We're doing it.
All right, here we go. We're going to share our screen, get this thing underway, and start giving you guys the goods. Okay, we're going to start this slideshow from the very beginning. Okay, so first of all, are you afraid? That's the question I ask you right now. Are you afraid to jump into the market? Well, I wouldn't be surprised if you are because you're seeing stuff like this in the actual news. And yeah, when you look at 2020, where we were selling 105,000 homes a year at like 8,700 a month, and now we're selling 5,800 a month. That's like a 33% reduction in the number of sales per month. What do you say, Chase? I mean, what do you think?
Yeah, I mean, it's less obviously than 2020, but you're getting in for buyers right now. You're getting into a market that does not have as much competition. Supply is flattening out, but there's more supply. Buyers have more options right now. There's not as much competition out there. And we're seeing that if it is not priced aggressively, stuff is sitting longer. We're getting more concessions on the buyer side. So there's a lot of benefits to being a buyer in this type of market.
Yep, 5,800 homes are being sold per month in Maricopa and Pinal County. Those buyers that are deciding to engage are getting good deals when they have a good agent. This is why Chase and I are getting people under contract for under 4% in new homes.
No doubt. Yeah, it's crazy.
Yeah, they exist out there. Now, let's talk about all the scary stuff that's happening, right? Gas prices. No joke. It's scary. Try being a real estate agent. By the way, if you know a realtor that's working hard and driving all over the valley and showing 50 homes to a buyer, give them a pat on the back because they deserve it. Being a real estate agent is not always the easiest, and we spend a lot of money on gas, don't we, Chase?
That's a fact. That's a
Yeah,
fact.
he's got a nice truck, and it's probably a
It's
gas
a
guzzler.
guzzler.
So we're a little higher than the rest of the country. Let's keep going. Yeah, and then on top of that, we got inflation's going up. Some people think the stock market's going to implode. I certainly don't, because there's a lot of good things in the economy happening, especially in Phoenix, by the way, with unemployment. Mortgage rates, when are they going to go down? They may not go down for a while, my friends. But one thing I will reassure you, if the economy gets worse and we go into a recession, it's almost guaranteed that the rates will go down because that's what happens. Rates go down when bad things happen in the economy. So yeah, right now, what are the rates sitting at, Chase?
A little over 6.5.
Okay, six and a half.
Still, yeah,
Yep.
still up.
And we're getting people into deals in new homes, particularly for under 4%.
Yep, 3.75, 3.99
Yeah.
for 30-year fixed mortgages.
Yeah. Don't always listen to the news. Call somebody that's in the market every day, knows what's going on. So you got all these fires around you. Don't retrench into fear. Come at it with knowledge. And this is what we're going to give you today. We're going to drop knowledge on you guys, right? When you look at top 10 cities where millennials find the right mix of jobs, believe it or not, Phoenix, Arizona, one of the best out there. Why? We have income growth, we have great jobs, and housing costs are starting to improve. So we're seeing a slow improvement in the housing market. Okay, here's your unemployment rate. You look at the national is the yellow line, and you have the Arizona line, pretty much tracking along those lines. 4.6% is not a bad unemployment rate. It's really not. It's still pretty good. And we keep on bringing in new companies. And I'm talking big companies to Arizona, tech companies, data centers, housing, it's medical, it's so robust. So we have a good job market in Phoenix. Also, when you look at mortgages, typically you can see what happens after recessions. These were all the big recessions over the last, 40, 50 years. Had a massive recession in 80 and 82, 83, 82. Those rates were insane. Those rates were so high. After the recession, look what happened to the mortgage rates. After 1990, look what happened to the mortgage rate. '01, again, a drop. The big Great Recession in '08 and '09, which kicked a lot of people's butts. Then the rates went down again. And now look at us again. Now they jumped up because in 2020, we saw rates that were, under 3. Don't know if we'll ever see them again in our lifetime. And then, of course, they jumped up because this is normal. And the rates have been pretty flatlined for several months. So this is what happens. It's very predictable. So if you're waiting for the rates to go down, be careful because if they do go down dramatically, you're going to see prices probably inch up. That's what happens because there's more demand. We saw the rates go down under 6 a few months ago, and a flood of new loan applications came into the market. It was like it happened overnight. It was crazy.
Yeah, and really it was a half of a second and then it popped right back up. But that's the thing is people talk about COVID-19 rates. What, oh man, the rates I should have bought in co or during COVID, right? Oh, 2%, 3%. But that's the thing we keep harping on it is a lot of these new home builders are buying these interest rates down too close to those COVID rates. I mean, you're in the threes compared to a 6.5, you're almost cutting it in half. I mean, that plays a massive role in the payment. So
Absolutely. Now look at this graph, friends. You can see when you look at the orange and the blue, all those were short sales and REOs, which is a bank-owned property. See all this distressed property that happened, you know, pretty much when it started in '08 and it continued for several years. These are the ramifications of the prices just bottoming out, going down like 30, 40% in the market. Then we had all this distressed property. Well, now look at the standard typical sales now, way over here on the right. Almost everything is a normal traditional sale with people that are not leaving, that are not upside down. We're running into it a little bit more now, though. If you bought something in the last 2 years and you want to sell, yeah, you might be underwater a bit. But I just want to reassure you, we're getting a little bit better. You can see the uptick of sales slowly getting better. And that's a good sign because we have a lot more population here too in the last 5 years as
yeah,
well.
and you can't even hardly see the short sales and foreclosures.
Exactly.
There's not a
Yeah.
lot.
So people are always, oh my gosh, we're going to have a foreclosure crisis. No, we're not because we have so much equity in the market. If somebody loses their job or something, there's a good chance they could just sell their house.
No doubt.
Yeah. Another graph of mortgage rates. You can see it. That half of a second Chase was talking about, that was back here in February. A lot of buyers got in, and right now a lot of buyers are hanging out, just waiting. I think the magic number is under 6. I think that's when people get really serious and interested. But again, talk to us. We can get you in for great rates. If your credit's good, if you have the numbers, we can get you in for great rates.
Yeah.
Okay, a little bit more. You can see the ups and downs of the mortgages and where we're sitting about right now. Now, this is pretty standard for Phoenix. This is seasonal. You can see all the deals that are going under contract. See the 25 line in red? We're trending about the same direction on 26, right? It's right there in green. We don't have any reason to believe that it won't look the same. So summer, mind you, is another opportunity for you to get in as a buyer and make a deal.
Yeah, yeah. So this is basically showing that basically from January till May, right about now, transaction volume is the highest. When it starts getting hot, people don't like moving when it's 120 degrees, so transaction volume starts to tick down. But again, that's where, like you said, a lot of opportunity is because these sellers, a lot of them, they still need to sell. So if you're a serious buyer, you're able to get out there with, again, less competition, and there are typically better opportunities out there that can be had.
Yes. And the other thing I've seen, guys, is that income is slowly getting better, right? Income needed to catch up to the housing buildup of prices. Now people are bringing in bigger incomes and they're more comfortable, making a decision. This is the index we use. It's called the Cromford Market Index. It's the secret sauce. Many practitioners in real estate in Phoenix use this, brought to you by the Cromford Report. This dial in the middle represents a seller versus buyer market. It's called the market index. Anything between 90 and 110 is a balanced market. You can see right there in the middle, that yellow is a balanced market. Right now, we have a slight buyer's market. When you look at the entire Phoenix market, you're looking at a buyer's market. Of course, there are some cities where it's a seller's market, but overall, we're in a buyer's market. Supply is a little inflated, but not much. Not much. It's been pretty flatline the last few months. Where we get hit a little bit is on demand. Demand's a little lower, but not really that bad, right? It's almost at balance. Look at these dials, Chase.
Yeah,
Almost
pretty
everything is
close.
pretty much in balance.
Yeah.
And that's what the market's been doing. It's been very flat the last few months, and we're doing 5,800 transactions a month, right? So you can see even here, the market trend line is pretty balanced. So good information for you guys. But even that being said, right now we've been steadily in a slight buyer's market, right?
Yeah.
Across the board. It might take a while. Okay, so we have supply, we have demand. Here's a really good graph, and it shows you all the big swings over the years. We had tons of supply that hit the market in '05 and '06, and then whammy. It just, totally dropped out, right? Everybody started buying like crazy. Demand came up, supply came down. Supply and demand are always trying to reach equilibrium,
Yep.
right? So right now we have supply that's fairly flat. Demand, this is the good news out of this whole presentation. Demand is slightly trending upward.
Yeah, and when you look at this, the pink maroon colors are indicating the buyer's markets, and you can see that there's three in the last 25 years, three or four, and we're in one right now. So if you're contemplating buying or being on the buy side, now might be a good time for you.
Yeah, and we're going to show them the data. New listings, you can see we have more listings that do not come on the market in the summer months, right? That typically happens. People go on vacation and such, they don't want to list their home in the summer, and then it kicks back up in the late summer, early fall, and then we have a big drop off at the end. So that's when new listings hit the market. Here's a graphic of what's going on, the sellers markets we have up there. The Cromford Market Index on the right, if it's above 110, it's definitely a seller's market. And as you go higher, right now, Fountain Hills takes the cake for the biggest seller's market in the valley. Actually, I'm sorry, Chandler. Look at Chandler. Wow, that's killing it. So Chandler's doing well. In fact, that's interesting. It's more of a seller's market than Gilbert, the sister cities. And then balanced markets, Cave Creek and Peoria. And then we get down to the big time buyers markets in Buckeye. If you want to make deals, go to these cities down here at the bottom.
Yeah. And it's interesting, you're seeing a lot more green. Things are ticking up than in the past. Looking at it, there's just not it looks like more municipalities are becoming green and they're ticking up. I mean, that's interesting.
Yep. A little bit of a correction there. Absolutely. And then here's a pictorial as well. Just a different look at it, guys. Uh, Sellers markets on the left, buyers markets on the right, balanced Cave Creek, Peoria. And we're coming down the home stretch here. You can see the monthly median sales price. If you look at April 2022, that was the peak. It was real high, 462 in that area. And then if you've noticed since basically 2024, it's just been jogging along, pretty much the same. And we don't really have any reason to believe that it's going to go up any in any big way, unless the mortgage rates really drop.
Right.
Yeah. So time will tell. And then buyers, they're getting deals. And I'm going to show you some data right now. And Chase can tell you it's happening because he's representing a lot of buyers. It's happening, and buyers are getting a lot of what they want. A slight decrease on price changes and between 25 and 26, but still, look at all those price reductions per week, 3,000 price reduction.
Yeah,
You're seeing a lot of that when you show buyers,
we're
right?
getting hit every single day, letting us know about homes that we've popped into previously that are having price reductions. They're sitting on the market longer and they're needing to adjust.
Yeah. Here's the point. If you wait to the summer, if things keep going this way, there's a good chance there'll continue to be price reductions during the summer.
Yep.
It gets softer out there and people want to move. So be on the lookout. Median agent days on the market actually ticked up a little bit from 2025. So you're not selling a house in 2 days anymore, unless it's like perfectly priced, perfectly staged in a
Definitely.
beautiful area. It's going to sit there for several weeks.
Yep.
So if you're looking at selling your house, it's time to get into reality because it's very difficult to sell immediately unless you have like the perfect house. Okay, and then concessions actually went up from last year, right? So we're talking about $10,000 of median concession money when you give concessions.
So over half the transactions right now, sellers are contributing concessions to cover closing costs, rate buy down, HOA prepaids, all sorts of things.
Yep, that's
So
right. That's right. A little bit about investors. Check this out. So this is the median rent. This will surprise you. Across Maricopa County, it's gone down like $200 since 2022. I have several rentals, and obviously this is a little concerning, but this is where if you want any consultation on investing, talk to us. We're both investors. We both own homes. And so this is important to know. That is actually going down. Also, vacancy rates are going up. So we will find better rent prices because I would rather have a lower rent price and have a tenant stay in my property than overprice it and have it empty.
Definitely.
So, and this is coming from the National Rent Report. And then here's another investor highlight. So since 2022, prices have gone down almost 10%. okay, on 1,500 and 1,900 square foot houses, which is typically a good rental
Yeah.
square footage. Okay, my friends. So here's what I want you to get out of all this. I want you to understand that this market, people are doing business. They're doing business right now. And it's really important to know that there's deals in any market. And if you try to time the market perfectly, you might be missing out. You don't know what's out there unless you talk to a mortgage professional, unless you talk to us. We can show you there's hope out there and you can see the numbers. Unemployment's good, demand is creeping up. So talk to us and let's see what we can do for you.
Yep, we're in and out of homes every single day. So if we know what you're looking for, we can keep our eyes peeled and let you know what's out there. And we offer a VIP buyer program for all of our preferred clients. So if you're out there, you're kind of tossing it around, we can have a conversation and see what your options are.
I've often asked people that bought a home in the 1980s, do you regret your purchase of that home in the 1980s? And they had like 17 to 21% interest rates. I have not had one person say I regretted it. Point is you buy real estate and when you hold it over time, things normalize.
Yep.
That's an asset that's worth holding on to. So don't be afraid. Be equipped with information. This is Chase and Jeff, EXP Realty. We're here to serve you. Give us a call. We'd love to help you.